Today's guest is tackling one of the most complicated yet widespread problems that exists between major retailers in the crypto space. Soravis Srinawakoon is the CEO and co-founder of Band Protocol, and his work is advancing the way data is understood, verified, stored, and received. Soravis, man, thank you so much for being here today. I know it's late your time and early my time, so I appreciate you staying up.
No worries. Thanks for having me here. Really a pleasure.
So how rare is it to have a blockchain project in Bangkok?
Actually, this is a funny story. I think, people think it's rare, but a lot of the, people don't realize, for example, Omiseko is based in Thailand, Bangkok. Really? We have Loom Network also based in Bangkok, as well as some of the core developers in the big major blockchain, are in Bangkok actually. So there's actually quite a few compared to, the size of our country.
That's interesting. It's not the first place that I think a lot of people think of for the space. So you actually went to school in the United States, right? You graduated from Stanford, is that correct? So
that's right.
You came here and then you went back. What was your path like after graduating Stanford? What did you do and how did it lead you to where you are now?
Right, sure. So I'm actually an engineer by training, even though I'm the CEO. So I did computer science at Stanford as an undergrad, right? That's sort of when I actually came across cryptographies, came across Bitcoin back in 2013. And that's why I became quite passionate about it, started investing on the side. And after I graduated, I sort of came back to Bangkok because I always know I want to start something, right? I want to contribute something meaningful to this world. And while investing, I guess I went into management consultant at Boston Consulting Group, which is like a top 3 management consultant, for 2 years, while still investing in a lot of these crypto businesses, as well as starting my own mobile games that relate to crypto as well. So people play my games and then they get free Bitcoin and Ethereums, right? That was back in the days, 2015. Nobody really did that. So we grew that to almost 800,000 users before we sold that business and then started Band Protocol in 2017.
That's awesome. So, but you were a trader for a while too, not just an investor, right?
Well, actually, I'm more of a hodler. So I do hold a lot of my tokens for quite a long time. And when I say long, I mean years. Right?
Yeah, well, I think that's the definition, of a real investor. It's funny in any other market or community, when someone thinks of investment, they think of decades or a lifetime of holding things. And then you mention investing to a crypto person, and they're like, "Yeah, man, I held it for like 6 months." The entire space has only existed for just over 10 years, so it is pretty funny. So. That led you to Band Protocol. What is the major problem that you're solving with Band, and how are you solving it?
Right. So I think we always come to this, right? What we call the Oracle problems. This Oracle problem is essentially the fact that smart contract and blockchain applications have no easy access to real world information, real world data, and API. Right. Think of it as this piece of code that lives within its own ecosystem, right? As simple as things on Ethereum cannot access information on Bitcoin blockchain, right? Let alone the rest of the information in the real world, and so they need someone to actually fetch that data into the blockchain, right? And that is essentially the job of Oracle, right? That's what Band tried to solve. Essentially, try to figure out what is the best way, the most decentralized way possible to bring the data outside of blockchain into smart contracts so that they can consume it in the most reliable and secure manner, right? And it's a really important problem because if you think about the smart contract, they are deterministic, right? In the sense that whatever input you feed, it will always give the same output, right? So you need to be able to give reliable input, for example, price of Ethereum, so that a lot of this lending protocol, a lot of these stablecoin, a lot of these DeFi projects will be able to run in the most decentralized manner possible.
Okay, so that makes sense. So I'm assuming that to some degree that touches on the widespread issue way beyond the crypto community that we see with fake news and false data. Is that really what you're getting at here? Is that you're verifying that news is actually real?
Right, right. So I think when we talk about data, right, there are data that is subjective, as you mentioned, in terms of if the news is real or not, right? It's actually much more subjective than most people realize.
Right.
And then there are objective data, such as let's say Bitcoin price, right? I think you and me and anyone around the world can generally agree what is the current price of Bitcoin, for example, right? And so with that, originally, when we started Band Protocol, we were focusing more on the subjective data, as you mentioned, fake news and all of that. Then, after we talked to a lot of our partners, a lot of our clients that we're going to use our solutions, we quickly realized that the better product market fit is actually on the more objective data, which is the Oracle problem, right? How do we bring this objective data into blockchain in a more decentralized manner? And that's why we sort of, I guess, I wouldn't call it pivot, but refocus in terms of what we do, to focus much more on the Oracle problems since last year.
Can you give a very basic rundown of what an Oracle is, sort of the Oracle for dummies? Because I think we have a very diverse listeners, and some of them may be in it for the tech, some may just be traders, some may be superficially interested in the lifestyle of people who are in this space. So can you define Oracle and tell us what it is?
Right. I think the best way is to give example, right? So one example is, with smart contract, right? You can write a piece of code between two people. For example, betting applications, right? For example, you and me want to bet if Chelsea going to win a Premier League tomorrow or win a match tomorrow, right? Now
it's going to be hard if they're not playing.
That's right. Or with this time. But let's assume they are playing regular time, right? You and me cannot trust each other, because if you lose, you may run away from me, right? That's why casino exists. That's why middleman exists. Now, with smart contract and blockchain application, you can actually write a piece of code that say, if Chelsea win, transfer my money, the money from me to you, right? Otherwise, transfer money from you to me. That's in a trustless way. I don't have to trust you. You don't have to trust me. And everything is self-enforceable. Sounds pretty cool, right?
Yeah, it's amazing.
The problem is, as a piece of code, right, it doesn't know whether Chelsea actually win or lose. Right? That's the information that live in the real world, not inside blockchain. So somebody has to tell that piece of code, somebody has to tell this smart contract that, hey, Chelsea actually win or Chelsea actually lose, right? That's the job of Oracle, such as Band Protocol and Chainlink, to actually pull data from the real world API into smart contract so that they can consume this data and use them within their logic, right? And this apply from betting application, as I mentioned. It applied to financial application that people are building that, right? Lending protocol, stablecoin, because a lot of these will rely on financial data. What is the current price of Bitcoin? What's the current price of Ethereum? And that's really critical in the smart contract. I mean, you look at the betting application, right? If Oracle is compromised like us, and we actually lie, false information got in and say, instead of Chelsea win, we say Chelsea lose.
Right.
The smart contract will automatically did something wrong, right? And that's a really bad thing to happen, right? So we don't want that to happen. And that's why Oracle is such an important factor in this ecosystem.
So that makes perfect sense. So it sounds like you have two issues. You need to bring the data in, but you also need to verify that it's true. So obviously, there needs to be a reward for proper data and a penalty for improper data. So how does that work exactly? How do you know that Chelsea won? How do you know that you didn't scrape the internet and get a false story on the winner of that game?
Right. So I think there are two things there. One is that when you fetch this data, right, when you ask these data providers on our network to go get the data, you want to build redundancies when it comes to the data source, right? So essentially, if you want, let's say, price of, let's continue example of a sport event, right? If you want data whether Chelsea win or not, you want to build redundancy at the data source. So you say, oh, get data from ESPN, get data from Sportstat, get data from whatever data providers that provide those stats, right? So you build redundancies. Even if ESPN is down, data provider can still go fetch from the rest of the data sources. So that's number one. Number two is that at the data validators level, essentially people will bring the data. You don't want one person to report that, right? You want multiple people to report the same data in order to build that redundancies and make sure nobody can game the system. And that means that's why we have in Band Chain, we have hundreds of data validators who perform this job, right? And as a data validators, you need to stake the Band token. in order to become a validators, right? And what that means is similar to other proof of stake blockchain, they have a lot of costs at stake, right? They have millions of dollars being at stake at that moment. That means in order to ensure that they don't want to act maliciously, and this is similar to Bitcoin, Ethereum, right? In a sense that you want the economic incentive of being a good person to be better than being a malicious actor. And that's how we engineer it such that, at a protocol level, a lot of our validators have a lot of money and skin in the game to ensure that they act honestly.
And they receive additional incentive for acting honestly. So it's not even what they're holding. You actually get more coins to stake.
That's right. So actually there are three factors here. One is the money that they stake, right? So again, they stake BAN token. If they act maliciously, nobody use BAN, the BAN will go down, then they stand to lose a lot of money.
Right.
Number two, they stand to lose future revenue, as you mentioned, because they get query fee from people who ask for the data. And then number three, if you look at our BAN chain, you see a lot of enterprise grade level validators. And these people actually stake for multiple blockchain. So if they actually cheat on BAN chain, people will lose trust and they will not stake for them on other blockchain as well. And these other blockchain are traditionally even bigger than us, like Cosmos, other bigger blockchains. So that gives us a lot of insurance in terms of why they would not cheat. And there's a lot of cost for them to do that.
So how will retail companies use BAN? What is the use case for a large brand?
Right. Retail companies, you mean like a traditional companies?
Yeah, I guess like a traditional retail company.
Right. So I guess you look at this two ways. The first part is people who are traditional market data providers. So people who actually provide data already, right? This includes, for example, Bloomberg, right? Or NASDAQ, companies that have financial data. Or ESPN, for example. What they can do is they they can use BAN to commercialize their data, right? They can sell their data traditionally to traditional companies into, blockchain application. So the more blockchain application used, they get more revenue from that, right? Just like how they sell B2B already. So that's the first part. The second part is around more of people who use the data, right? This includes, for example, companies like people that do in the supply chain, for example. They want to do conditional payment, right? Conditional payment say, if I receive an invoice from company A, process payment from me to that company, right? In order to automate that in a smart contract, the smart contract need to know whether the receipt actually got received, right? And again, Oracle will be used to connect those data in the real world into a smart contract so that it's able to compute on that logic.
Okay, so how will a crypto project use BAN? If it not the ESPNs and Bloombergs and NASDAQs of the world, but the exchanges and the DeFi, and all of these other companies in the crypto space.
Right. So I think when you look at DeFi, I think that's a really clear, easiest example, right? You look at DeFi like stablecoin, like MakerDAO, for example. Maker rely on the fact that people deposit Ethereum as a collateral, right, or other asset now, and then they mint new, stablecoin, right? Right. And the reason why they are always collateralized is the fact that whatever they lend out the money, right, has to be less than the money that is being put as a collateral, right? So meaning the system is always over collateralized. That means the smart contract need to always knows what is the price of Ethereum right now, right? What is the price of the collateral? And that's the job of Oracle to tell them, right? Ethereum is $200 now, Ethereum is $300 now. And that's why it's really critical Oracle is not compromised. If you look at incident like B0X, for example, that was one of the attack relate directly to Oracle problem, because B0X rely on chain price, which is the price of on one particular exchange, just one exchange, right? No redundancies, one exchange. Right. So that allows attacker to manipulate the price on that particular exchange, which is a decentralized exchange, to game the system, to think that fool basically the system to think, oh, this stable coin is worth $2, so then it lend out money more than the ape actually has, right?
Right. Yeah, that makes sense. So I watched a past interview actually, and you spoke, it was really interesting about how, I guess specifically in 2017, the crypto community grew, but the quality went down primarily because the people who were joining the community were all speculators. So basically everyone was speculating on price. It sort of transitioned from, I guess, the tech and the blockchain to strictly, I want to buy this and sell it for more. And therefore the community became, I guess, more negative, trollish, and just the things that happen, I guess, when a community expands. So How does Band or what you're doing improve the quality of the community and sort of bring it back to the original intention?
Right. So I think communities is always tricky, right? How do we build a non-toxic communities in the crypto space? And I think that's really important for us. We always make sure that we always make sure that our communities are always trying to be non-toxic, doesn't attack other people. Of course, we cannot control them 100%, but at least that's some of the.
We've seen that, yeah.
That's right. I think at least we try our best to send that message across, that the team try to just convey this culture, right? And I think over time, I do hope that past the toxic in 2017, when there's a lot of scams, when there are lots of vaporwares, now in 2020, people to start to pay more attention to fundamental. People start to pay much more attention to projects that have adoptions and actually solve real world problems. And that's why we start to notice a lot of our community members actually are much more sophisticated, understand DeFi, understand adoptions. And I hope that, as we grow over the next few years, we can remain the I guess the DNA of how we start this and make sure, we don't get to that point.
Do you still experience sort of headwinds from the larger community or I guess even the world in general as a result of the way it was in 2017, the ICO craze? I mean, basically any project that starts in this space is immediately labeled a scam until proven otherwise. I guess that's what I'm saying is that, I know you've experienced it, I've seen it, but like the minute you start something in crypto, it's not innocent until proven guilty. It's you're a scam until you tell me otherwise.
That's right.
So do you still experience that because there were all these scams in the space before?
Right. I think there's always prejudice for that for sure, right? But I think the fact that we went after a lot of the more traditional VCs, venture capital and investors really help a lot with us, right? I mean, we have Sequoia Capital, one of the biggest traditional VC, and we have Binance as the biggest cryptocurrency exchange to support us. I think that speaks a lot about the project, because these traditional VCs like Sequoia conducted, I can say, extensive due diligence on projects, right?
Yeah.
So that did help a lot. But of course, like, as you know, there's a lot of tribalisms in the industry. When people invest in some particular companies, I think not just in the Oracle space. I mean, you have Bitcoin maximalists that talk bad about everyone else. You have Ethereum maximalists that talk bad about every other, layer one solutions. And of course, you have, Oracle and all of this, right? I mean, it's always going to happen.
You want to say Link Marines, but you won't. So I'll say it for you.
I'm always trying to be careful.
I know, of course.
But
you didn't say it. You didn't say it. Right.
Yeah, I think I don't like that toxicities. I don't like the tribalisms. I think all of us are trying to innovate. All of us are trying to contribute positively to this industry, and we are still a really, really small industry by all measurement. So no, I think the better way to do this is to think positive and try to help each other to grow adoption and to bring this mainstream instead of having this all infighting between each other.
Right. So you touched on this just now. Obviously, you gain a level of credibility when you get legitimate venture capital behind a project. Can you talk more broadly, I guess, about the process of going to someone like Sequoia and securing capital from them, but also the effect, I guess, in general on venture capital in the crypto space and how projects develop?
Mm-hmm. Yeah, for sure. I think in terms of process, like I said, it's like a traditional investing, right? Even though it's a token deals, right? It's still really traditional in the sense that, when they invest in early stage company like us back then, they look at the ideas, they look at the problems as the number one, right? Is this problem worth solving? Is this problem worth billions of dollars, right? I mean, there are $1 billion funds, so they're not going to look at $1 million opportunity.
Yeah, they don't care.
So they look at whether this is a big problem worth solving. Of course, Oracle, like I said, is one of the big fundamental, missing piece in the crypto industry. So that's important. Number one. Number two is the team, right? Again, as an early stage companies, I think Sequoia as well as other investors understand that people will always pivot. Okay, you can start with the bad ideas, but with a good team, you can always pivot to something good.
Right.
Okay, so team is actually really important, and they look at us and they look at obviously with our team, even though we are young, we have been in the crypto space for a long time, right? As well as, we like I said, I'm a major investor in a lot of the crypto projects. I understand a lot of this crypto landscape, all this layer one solution, the DeFi's and all of that. So I think that was really critical, that they saw that the team is really hardworking, really talented, and have the abilities to persevere and sort of pivot whenever we need to, right? And that's really important. As I said, crypto is really early. We are experimenting with all this crypto economics. We are experimenting with all this protocol. If you have the right team, you can always pivot and try something that works.
Right. It's just interesting because in 2016, 17, the ICO craze, even in the United States, where clearly it should not have been allowed to happen. But companies could raise hundreds of millions, if not billions of dollars for a problem that maybe required $1 million or $2 million to solve. And then,
right.
So that's over, seemingly. Mm-hmm. So does that mean that venture capital is now necessary to grow projects in this space? Do you really need outside institutional money to make it happen?
Yeah, I think there are always capital around, whether that be from crypto VCs or from traditional VCs. There's always there's a lot of abundant capital around. The thing is, and I think this touched on the second part of your questions, why we pursue traditional VCs, is that they are much longer term than
right.
crypto VCs.
Right.
I think a lot of crypto VCs call themselves VCs, but they are more like hedge fund in a sense that they trade in and out, and they are like 2-3 years at maximum, right? Whereas a traditional VC like Sequoia, a 10 years fund, right, or longer, and that means they are here for the long term. They're not going to sell. They're not going to, unlike crypto VCs, they don't have the pressure, the pressure from investors to sell and liquidate the fund in a fast manner. So they stay here for the long term, as well as I think they are really helpful, not just in terms of bouncing idea, but they're helpful in terms of giving support when it comes to operation, legal, marketing, and all of this. So it's. I think we are really fortunate, and I think that's something that we have been always grateful about their support.
It's interesting because it sounds like obviously crypto has its own venture capital, but their structure is not actually the kind of venture capital that most projects that are serious and want to be around for a long time need in the space.
That's right.
You have to go to traditional venture capital. And I never really thought about that. That's really interesting. So you've touched on the fact that you yourself are a big investor in a number of crypto projects outside of Band, obviously. Would you mind sharing what your worst and best investments have been thus far?
Right. That's a really tricky question.
That's why I asked it.
In terms of the best investment, actually, I did actually have quite a few good investments. Obviously, Ethereum was one of the best. My friends my friends were asking me to invest in the Ethereum ICO back then, at 50 cents.
I needed to be your friend. I had the wrong friends.
Yeah, but I actually missed that, and then I started buying more in the $1 or $2 range, and up to even $10. But back then it was actually quite scary. A lot of up and downs, right?
Of course, $10 to $5 is the same as 1,000 to 500. So yeah,
that's right. So I think that was obviously Ethereum was one of the best for sure. Me and my friend were one of the biggest we actually one of the biggest investors. Sorry, not one. We had the biggest investor in Engine. Engine coin. So we actually made substantial investment into their team. I flew to Singapore to see the CEOs and co-founders and back then. We were also a big investor in Kyber. So these are one of the bigger investor in there. So that was good. We were one of the biggest investor in Icon back in the days. So again, it went up quite high. So yes, those are some of the biggest investments.
Wow, those are amazing. So how about the worst?
I guess the worst, of course, there's always the worst. Let me think. I think the worst one, I'm not going to name the names because obviously, I want to name the bad one.
Right.
But we were really interested in the ideas of, I guess, automatic payment. So there was this one company that were trying to do, a scheduled payment ahead of time. Right. In the sense that, like I said, smart contract is deterministic. So it's really difficult to do, like, for example, recurring payment, right? Pay every single day on that.
Huge problem. Yep.
Right, so there was one company that was trying to solve this. They even partnered with mycrypto.com, my the wallet, to bring that solution. So we were really quite bullish as well. But obviously the investment didn't turn out as well as other investment. But that's fine. I mean, you miss some, you hit some, and I think that's the general investment.
Don't be a part of the 7.1 million Bitcoiners in the United States who have Bitcoin and a retirement account, but don't have Bitcoin in their retirement account. Seriously, you can hold Bitcoin in your retirement account and not just GBTC. How can you do this? Through a self-directed Choice IRA by Kingdom Trust. The first 1,000 users to open a Choice IRA will receive $62.50 in free Bitcoin. Visit retirewithchoice.com/wolf. That's retirewithchoice.com/WOLF. Podcast listeners receive extra points to move up the waitlist and get their Choice IRA first. Do it right now. It's time to take control of your financial future and free yourself from the restrictions of classic retirement accounts. Are you sick of paying ridiculous fees to trade crypto? It's time you try Voyager. It's hands down my favorite place to buy and trade crypto, and it's 100% commission free. Voyager gives you easy access to more than 30 top crypto assets, and you can instantly transfer cash from your bank account so you never miss a trading opportunity. Even better, you can now automatically earn interest on your crypto holdings. Currently, they're offering 5% interest on Bitcoin and 6% on USDC. Yes, you heard that correctly, 6%. And there are no limits or lockups, which means your funds always stay liquid. Find out why so many people are making the switch to Voyager. Visit investvoyager.com or search for Voyager on the iTunes or Google Play Store and get $25 in free Bitcoin when you use the promo code SCOTT25. That's investvoyager.com, promo code SCOTT25 for $25 in free Bitcoin and start trading today. So when you were investing, were you doing this independently with a group, with your friend, or were you actually like a structured VC fund yourself
Right.
and investing in these companies? Or were you, buying the ICO or going on an exchange and buying the entire order book? How did that work?
Right. We were actually not a structured VC fund. We were more like syndicates of people in Southeast Asia. We were one of the biggest in Southeast Asia.
ICO pool type thing.
Yeah, that's right.
Yeah.
That's right. Back in the days, right. My friends sort of organized that and ran it. And so, yeah, we would try to identify high potential project, actually look into the fundamental, and then went in big in terms of, either ICO as a pre-sale or whatnot, right? We generally do that. Actually, 0x was one of the best as well. I was quite big on them. So yeah, I was more in charge of looking at the token economics. I was in charge of looking at the areas that we want to invest in. And that's why I became really fascinated. And it was on the side when I was at BCG, right?
Right.
I was really fascinated with token economics, with a lot of these different solutions that are coming to market, and that led me down this rabbit hole of I guess realizing that Oracle problem is a big problem.
Right. That makes sense.
Actually, sorry, I missed Ling. Ling is actually one of my best performing
That's funny.
Actually,
I mean, would you consider Chainlink to be your main, I guess, competitor, or someone who's trying to solve almost the same problem? Correct.
Right. I do think that I invested in Link a long time ago since ICOs. I think Oracle problem is big. I am a firm believer of a non-monopoly world. I don't believe in a winner takes all, right? I believe that a lot of these projects, not just Oracle, but layer one solution, for example, or even digital money, there are always trade-offs. Right, in everything, there's always trade-off, and that means there will be solution that make different trade-off, make different decide decisions, and so that's why I'm really bullish and still am really bullish, of course, on Oracle, and that's why we decide ourselves to be obviously different to Chainlink, and we also think that again, I admire Sergey. I think Chainlink team is really good, really solid, really smart team, and I think. I guess we don't look at them as competitors the way that I don't look at Cosmos as a competitor of Chainlink. Competitor of Ethereum.
Ethereum, right?
I believe in people having different design, answering different niche, and that's what I believe. So I think the more solutions, the more diverse, the better for the industry.
I would have to imagine also, like, at the moment, we're talking about a very small space. So yes, I think right. to some degree now people could view it as competitive, but if we reach mainstream adoption, there's going to be more business and more applications for these things than one company could ever service, I would imagine. So let's talk
That's
about the
right.
idea of mainstream adoption. How, I mean, obviously people talk about it in terms of Bitcoin all the time or Ethereum and all this thing, but blockchain in general, how does it get to the point where it's the underlying tech behind everything? It's the internet, it's email, it's cell phones. Nobody's worried about what it's doing. It is just mainstream adopted as the thing that's running, most of the major business in the world.
Right. I think, we are still quite a long way into mass adoption, that's for sure. But I do think it's inevitable, in the sense that, you look at the adoption curve, you look at the infrastructure that are being built with major companies, traditional companies in the past few years. It has been amazing, right? You have players like Facebook trying to come in with Libra. You have, the ICE building their own cryptocurrency exchanges. Or even in Asia, we have one of the largest bank here trying to enter into crypto space. A lot of these traditional players are coming in, right? You have Robinhood, you have in the US, you have a lot of these traditional players coming in. So I think over time, as we, the younger generation, the crypto native, digital native generation grew up, it will become part of our life, and it will become part of the, again, mass adoption will come. It's just a matter of time, and it's just a matter of a lot of these players coming in. I do also believe that the tech has to get much better, scalabilities, as a lot of people talk about. E 2.0 is coming, a lot of layer 2 solutions are coming. Really bullish on that. Other layer ones, I'm also really bullish on that. Near Protocol, Solana, Cosmos, Polkadot, Celos, all of these companies are trying to bring it to mass adoption. And I do think that over time, the UX UI will be much better, along with traditional player coming in. And that will truly lead us to much more mass adoption in the coming years. And I think we're going to be surprised how fast that comes.
I think anyone who probably was in the space in 2010, 11, 12 would already say they're surprised at the velocity of how fast it's gone and where we are now. So I would expect that, like any technology and data, that would only get faster, and we will see that adoption much sooner than probably people believe. You touched on Libra. What do you think the place is for, I guess, national digital currencies, Libra, all of these things are in a decentralized world and that we're trying to build. These are obviously highly centralized currencies and concepts. So where do Libra and digital yuan, digital euro, those things, where do they fit? And are they, a threat to what you're building and others are building?
Right. I think two parts to that. The first part is, yes, it is ironic that a lot of these projects are trying to call themselves cryptocurrencies or, using blockchain application. I do believe that they are more like an e-wallet than blockchain decentralized applications, right? As you touch on. So I'm not really bullish on them, overtaking or, stealing the power from the actual apps or the decentralized applications or, like Bitcoin, Ethereum, all of that. I don't think that would be the case. I don't view them as any credible threat, much more than PayPal or, other centralized solutions. What I do believe though, which is the second part, is that they will actually help to bring more adoption to blockchain, because obviously, even though they are centralized, it will rely on some of this, infrastructures of blockchain. It will get people more familiar with it. It will bring more credibility with it, and that in itself will provide almost like an on-ramp, right, for normal people to sort of, oh, I understand blockchain now. I now understand how to hold my keys. I understand how to hold this wallet, how to send money, and now I can hold Bitcoin. Now I can hold Ethereum by myself, and that's a really important thing to happen.
Right. Even their very basic level understanding of how to send and receive or use a wallet, all of those things, I think obviously would be huge for that future mass adoption we talked about. Pivoting, I guess, off of like the Libra and national currencies, we've seen this humongous rise in stablecoins. I mean, billions and billions and billions, almost parabolic in the amount of them being printed and used. I was thinking about this recently, and Ari Paul on Twitter had written a bit of a thread about it, that basically this huge rise in stablecoins has eliminated the the currency use case of Bitcoin and other cryptocurrencies. Basically, calling Bitcoin money is sort of a misnomer now because you can use a stable coin. It's faster. It's not volatile. You know, you don't buy a cup of coffee for $1, and by the time it's transacted, you paid $1.30 for it because prices changed by 30 points. So do you think that stable coins are the future of actual money and transacting in cryptocurrency?
Right. No, for sure. I don't disagree with that. And I don't think that most people in cryptos believe that Bitcoin is supposed to be money, right? I think in the past few years, a lot of people start to realize, and of course, the narrative has always been Bitcoin is a store value, right? Similar ways to how Ethereum was trying to be a store value now by, you know, introducing all this DeFi concept, right? And that's rightly so, right? I think the word cryptocurrencies does more confusion than it helps, right? Because it's volatile. Right now at this moment, I do think that a lot of these crypto assets will become more of a store value, so digital gold, right, as opposed to digital money. And yes, stable coin will play a major role as a money, as a medium of exchange, as a money transfer around the world, and it's good. I mean, people can, you know, change, you know, money around the world in a really efficient manner. It's already happening, and I do think this adoption will grow. And in any case, it will also help Bitcoin and other crypto assets that are trying to be digital store values in the end. So I don't think they are competing. It's a really different use case, right?
It is. It's just that there have been a lot of companies. We always heard about Backed, and you'd be able to buy Starbucks coffee with Bitcoin. But in reality, anyone who's passionate about Bitcoin doesn't want to spend it to buy a cup of coffee. I think, because you always have that fear that the price is going to be double by the time you get home. So it is interesting to see the rise of stable coins. So what are your thoughts in general on the global economy right now, with regard obviously to COVID and the supply chains breaking down and all of the things that are happening? And then I guess where cryptos falls in context with all those things that are happening.
And that's a really tough question. I think it's really, really unfortunate, of course, where we are now, due to COVID, due to all these riots and all this, right? I mean, I'm not going to comment on that, but I think with regard to COVID and of course, Fed printing a lot of monies right now, right? It's not going to end well, right? I mean, I'm quite bearish in terms of the economies right now. And by that, I mean, of course, then I'm bullish on cryptocurrencies because obviously it's always a hedge against the world, right? I do think Bitcoin is a protection against that inflation. And I do think we're going to see inflation in the coming years, not in the short term, but it's going to come in the long term, right? And now, I mean, if you look at, I guess my view is this, right? In 2008, when we have the financial crisis, right? Where did the money go, right? People print a lot of money. And the money goes to the rich people, right? It helped to bail out the bank. It helped to bail out the big institutions. Of course,
corporate socialism.
Right? Exactly. And I think, over the past 12 years, I guess, people argue that there's no inflation. But that's not the case because inflation actually happened, but it happened in the rich asset, meaning real estate, meaning stock. You have equities reaching all-time high. You have the bond and all of this, right? Because why? Because the money go to the rich people. Right, and that's why you see, inflation in the rich asset instead of general commodities or price level that people experience. But in the case of now, 2020, it's really a different story, right? Because now it hit hard across all different sectors, the rich and the poor, of course, in particular, the poor people, right? And now with this money printing going to more general people and populations, we're going to start seeing much more inflations across the board, not just rich asset anymore, but commodities and all this other asset class. And I do think that people will start to realize and start to question, I guess, money. People will start to question what is the value.
I think we're seeing that already. I think we're seeing that already. I think actually like your average person now is actually had their eyes open to some degree to this and are like, what is happening? Like, this doesn't make sense. It really doesn't. And then you also see the stock market going parabolic while we know that the economy is contracting and jobs are down. So it's like you have this glaring siren that's drawing attention to this problem. But the question is, how does, I guess, a poor person, especially not in the United States where they might send you a stimulus check or, how do you navigate this? Is the answer really I go all in on crypto and I start transacting in Bitcoin like people do in Venezuela or Lebanon or these other places that have seen hyperinflation? Or is there some more balanced approach? I mean, is it time for people really to go all in if they're desperate?
Right. Well, to begin, I don't think I'm an extremist in the sense that, of course, I don't believe that anyone should, put anything in one basket, right? People should always diversify. And that lead to this, of course. I mean, if you look at the money, you look at, cryptocurrencies, is a way to diversify your asset, is a way to, I think this is the quote from Chamath, right? The
1% everybody should have, right? Yeah, exactly.
Exactly, right? I mean, you think of it as a hedge against the world, you think of it as an insurance, right? If the 99% fail, then at least this 1% may save you, right? If it doesn't work out for this 1%, it's fine because your 99% is still there, right? So it's a hedge. It's just like you're buying insurance, right? If you don't experience an accident, it's fine. You lose that money. But if you did, this will save you, right? So I generally view it as that as well. And now it will depend on your risk appetite, right? If you're a younger generation, you don't have, obviously you're much more, I guess, risky than a more older generations. So you may want to put more percent into that. I mean, even if you're older generation, fine, you're comfortable with what you're holding, you may want to diversify into this. I mean, I think it depends on people belief and how much they want to diversify. But the most important thing is at least they do their own research, right? They understand
always.
They understand what give these values and what give the money values, what give the gold values, right? A lot of these people don't really question, and I hope people start to question more of that.
Yeah, that totally makes sense. And that's absolutely my approach to investing in general. And when I would talk to people, I guess what I was getting at more is if you live in one of these places where hyperinflation actually becomes a problem and isn't theoretical, I guess that's the point where you have to actually question what, if you have other assets you can even invest in. Because you're talking. Yeah, go ahead.
Sorry.
No, please.
No, I was gonna say that's why I guess you see a lot more country like Iran, even, right? Most recently, where people start to fall into Bitcoin and the price jump up like almost 2-3x than other exchanges. I mean that really demonstrates the use case of Bitcoin, right? It's essentially a self-sovereign store of values. Nobody can confiscate you, right? And it's actually belong to you, right? And I think that's fundamentally is truly revolutionary, and what actually draw me to Bitcoin to begin with, right? It's the first time in human history that you are able to hold your own values, right? And that's really powerful, right? Think of it like if you're in those type of countries where, your money, your piece of paper doesn't worth anything. You cannot buy USD, you cannot buy any other currencies because of the government sanction. You cannot buy gold, you cannot buy anything else, right? What are you gonna do? You actually die, right? You actually cannot escape that. But with Bitcoin, you just remember the password. With cryptocurrencies in general, you can remember the password. You can walk across the border without anything else, and you can start a new life, right? And that is truly game-changing for me, and that's truly revolutionary for me. We may not see that right now, of course, in Thailand, in US and all Europe and all we call, I guess, developed countries. But you never know, right? You never know. I think you see country like Venezuela, which used to be a really rich country in a couple of decades back, and now you see what's happening now. So I don't think there's such thing as 100% safe, and that's why having this as another alternative that is truly self-sovereign, truly censorship resistant, that is the number one properties of this whole blockchain applications.
It's the only true hard asset and hard money, I guess, in that regard, that can't be confiscated. But that with that comes a tremendous amount of responsibility that I think your average person is not willing to assume, like to become your own bank and worry about your own security and prevent the hackings and not be insured, and all those things are obviously huge barriers to mainstream adoption. So to a degree, people have to trust someone like you, if they're going to buy your token or something. Maybe people they don't want the responsibility of holding their private keys. How do you address that? I mean, you make it obviously much easier for people to invest in these things and not have all of the responsibility and weight on their shoulders. Is that right?
Yep, that's for sure. And I think, like I said, a lot of more, I guess, ironically, more trusted institutions going to come into play. but that's still fine. I think it's also good. Like, I think the properties of censorship resistant doesn't apply to, the majority of the people right now.
Right.
And that's fine. I mean, again, I'm not an extremist to be, to be unrealistic, right? I do believe this to play an important roles, and it will be good for people that are not familiar with this, to start to bring more adoption into it. And I think generally we're gonna start to move away from that, right?
Totally a separate question. How did you connect with Binance and end up being listed there? It's funny. It's like one of the mythical things in this space is how does someone end up on Binance? How does it actually happen? Could you talk about the process of connecting with them and getting listed and becoming, I guess, a partner with them?
Right. That's just on a high level, I guess, obviously it's quite confidential. Just like, and not just Binance, but I think too, maybe other investors.
Yeah, but you can tell me. It's fine.
Yeah, but I think in general, like I said, I started off in this industry as an investor. So, I did get a lot of, I guess, connection and got connected into a lot of the VC fund, a lot of the people in the industry already, right? And of course, I attended most of the conferences, talking to people, talking to industry insider, the founders, the builders, everyone in this industry. And that's sort of how I guess I know the team, know other people, not just VC, but exchanges, wallet, and all this ecosystem players. And I can say that Binance is one of the more professional players in this industry, and that's why we really like them, and that's why we want to work with them.
Makes sense. Has COVID and the shutdowns and all these things affected your internal operations? Has it slowed your progress? Has it really had any effect on your business?
Mm-hmm. Right. Actually, it's the opposite. I think we become much more efficient.
That's so funny because that seems to be the case. Yeah.
Right. Yeah. We start working from home 3 months ago, actually. And I mean, we're not back in the office, but we were working from home for 2 months. But we were obviously, we always define our based on output, right? So it doesn't really impact a lot of these efficiencies or productivities of our companies. Yeah, so I think it has been fine. But in any case, I think a lot more people start to realize that it is more efficient to sort of work from home. Doesn't have to go through this transportation and all this hectic things that are going on, and that's why we are quite good. We're quite okay. And luckily, a lot of our partners are overseas. Most of our partners are crypto companies that are not related to financial traditional players, and that's why they're not affected too much by COVID.
Can you talk about who your biggest partners are? Is that something that you can share, or is it private information?
Unfortunately, a lot of these are private. I think we are working quite hard on in terms of integrations with a lot of these big partnerships that are coming up. And unfortunately, I guess we are moving away from the model where we try to announce something first before we build, to the model where we build before we announce, right? And
the announcements of an announcement of an announcement. Come on, we all know about that in this space. No naming names, but
that's right. I think we saw that in 2017, and that's why when we started in 2018 and 19, and we always a firm believer that we should build first over marketing, and that will come eventually. So again, we are here for the long term. We are here for many years, so we're not in a rush to sort of do all this I guess borderline sketchy gray line areas. Yeah.
What was it like building a blockchain-based company through the crypto winter?
Oh yeah. Two things. I think number one is actually good because we can concentrate, right? We can concentrate on actually building meaningful product. We can actually concentrate on listening to the partners, listening to investors, feedback from users, and actually ship a meaningful, useful product to the end users, right? So that's number one. I think it's actually really helpful. It sort of break down all the noises from others, right? And of course, like I said, because of this winter, a lot of the scam projects are gone. Of course, you still have some, but most of them are gone, and that's good because you filter all the noises out, right? And then at the same time, yes, number two is obviously you have to persevere. You need to have a good runway and manage your startup as a startup and not as a rich blockchain companies. And that's what we have been always doing, right? We're always prudent about our runway. We're always prudent about hiring, about spending money. And that's a really unique properties of us.
Yeah, not something that is shared by some of your contemporaries from the earlier ages of this. Certainly, it's funny you say that a lot of these companies were weeded out by the crypto winter, but I think a lot of them still have tokens that are probably trading on major exchanges and bag holders that are still
That's right.
find a seller, or there's actually buyers. It's something really unique to this. Well, I guess it's not so unique since we have zombie companies like Hertz pumping 800% on the stock exchange. But it really is something. I think it's a pretty big problem probably in this space because of the tokenization. People are actually trading companies that probably are never going to have a product. Do you think that? I mean,
that's right.
Yeah.
Well, I mean, like as you hint, I mean, it's not just in crypto anymore, right? It applies to penny stock and other stock around the world.
Yeah, it's crazy.
It's unfortunate, but that's why we have this podcast. That's why we have this educational material that hopefully more people are doing. And I really admire what you guys are doing, what other people are doing.
I appreciate that
because it's really helped the industry to make it better.
So what can we look forward to in the future from you and from Band? What are the next big landmarks that we'll see from you? Big moments and events. I know you don't like to make huge announcements, but what are the things that are coming in the future that everyone knows about?
Right. So again, I think number one thing is, of course, we are. Like you said, we don't like to hype around any particular date or event because I think obviously this is a really long, continuous journey, right? There's no such thing as the ending. But for me, number one important thing that we are always focused on is adoption, right? And actually creating meaningful real world usages. So I'm really excited in the next few years that we're going to be able to drive, meaningful adoptions for our Oracle solutions. We are very excited in the next few years to secure, hundreds of millions or billions of dollars in DeFi as well as smart contract across different layer one solutions. It's going to happen gradually. It's going to happen over time. It's not going to be, one night and we went from 0 to 1 billion, right? It's going to take time. But personally, I'm really interested and excited about this journey that we are taking. I think we are in a place where we can say we start to see much more product market fit with our partners. So now it's all about scaling. It's about, actually scaling our team, integrating our solutions, and make sure we can deliver the best value to this whole industry.
And what's the best place for people to follow both you and Band Protocol, keep up with what you're doing? If they want to become an Oracle, how do they get in touch with you? What's the best way for people to interact with you after this podcast?
Sure. I think our website, bandprotocol.com, obviously the best place to study the first material. In there, you can obviously find a link to somewhere else. Our Twitters, our Mediums, our Telegrams, and our Discord are official channels. So we always have our official team members there. Our Mediums are always up to date, so you can get all the information there. And like I said, I'm always there on Telegram. Always happy to answer any questions, and I'm looking forward to growing these communities, looking forward to growing meaningful adoptions in the next few years with all of you. Yeah.
Awesome. Well, thank you so much again for the time. I definitely learned a lot, and I'm looking forward to seeing what you guys have for us in the future. We'll have to have you back on for an update a couple months down the road.
For sure. I'm happy and my pleasure as well for having, thanks a lot for having me here. Always a pleasure to share a lot of this information.
Of course. Now I'll go start the rest of my day and you'll go to sleep.
All right.
Have a good one.
Thanks a lot, Scott.
Bye.
Cheers.
Let's go.